Yo, what's good, everybody? Today is Tuesday, 21st of October. We're about to run through price action from the day. We're going to look at kind of the conditions and how that's been affecting price recently. But I just want to quickly show you guys this really nice A+ long setup on ES and why I actually didn't take it in the moment. So without further ado, just hop straight in. All right, so zooming out, right? What is the biggest thing that we do? Like, this is the 10-second directional analysis that I talk about all the time. Applies so beautifully here, bro. Opening the market with all of this price action not being here, what do we obviously think the bias is? Like, very obviously, right? Actually, I believe no, we're right here, right? So opening the market right here, what do we believe the bias is? We're obviously very long bias, right? Very long bias, because there is no reason that at this point price should continue relatively lower, right? Maybe we might manipulate a little bit lower to some kind of equilibrium of this range right here, which we tap literally perfectly, then we go higher, right? Or we might just kind of play around and then go higher, right? But everything tells me long. Nothing is telling me short. That's really good for me, right? So I'm marking out my bigger time frame draw on liquidity, right? Boom, right here. Same thing on ES. Even though ES does look a little bit weaker, we could potentially be sweeping one of these highs, because right when we got above that high, we did get some displacement, or not displacement, but we did get a little bit of a slowdown in price moving higher, right? So I'm watching that and I'm recognizing NQ is much stronger on the bigger time frame than ES is. So most likely, if I'm taking those bigger trades, I want to be trading whatever the stronger one is. So most likely NQ, right? So watching this now, that same draw on liquidity on ES is going to be right here on this high, right? Now checking out NQ, because I think that was a cleaner one to trade today. We opened the market right around here, right? So let's take a quick look. We opened the market right at 9:30 right here, and we are already below London session, right? Everything in my bias tells me long today. Nothing looked at this and told me short, right? This is a very textbook day. We're within this big area of imbalance price action. I'm not even gonna mark it out, right? Yeah, I'm not even gonna mark it out, bro. We open the market, we immediately come down and take London though, right? The only thing I was waiting for price to go is maybe pull a little bit deeper into this 1 hour, tap this. I had this drawn out. We're gonna come back and tapping that. Looking for price to come down and hit equilibrium of this range right here, which I believe we did just barely tap. I didn't even have this drawn, but this is definitely something I should have, because wow, I mean, look at, we were very close to that, right? That was maybe the one thing I'd want to see get tapped, but even without that getting tapped, this is still nice, right? So what does price do? Keep in mind, we come into the day, bro, we have no news today, right? Like I want to talk about conditions, the market we've had the government shutdown, right? And we haven't been having any good economic news coming out, right? Everything has just been slow, lethargic. And literally last week, maybe had one 8:30 news event, like maybe 1 10 a.m. Literally nothing has been coming out, and the market just been playing and the algorithm's been going. But we need to see some volatility, right? We need to see a move. So when I see this, right, and I recognize, okay, I see everything that looks pretty good, I'm not looking to hop into a trade. Honestly, I'm looking to hop into a trade. So at this point now, where am I gonna be? I'm looking to take a long, right? Where am I gonna be taking my long till? Most likely, I want to take it to London highs. Why is that? Because right here on the lower time frame, let's zoom down to the 1 minute, right? Recognize structure. What is structure telling me here? To me, structure is telling me that we want to go ahead and run all of this liquidity right here. We want to go ahead and run all that, right? Now on ES, what do we end up doing? ES is much cleaner to look at these lower time frames on, because ES is more of the stronger asset for today, especially. So watching this, right, same 1 hour thing we're watching, we're waiting for that hourly to get tapped into. So pulling this over, geez, gonna be right about here, right? And ES especially is better to watch this 1 hour get tapped, because on NQ we have already been within imbalance price action. We're just tapping lower, but ES hasn't experienced that imbalance price action, right? It doesn't matter about the exact fair value gap. Just use your eyes. Imbalance is where price moves quick and then stops a little bit, right? So we want to see price pull back to the imbalance area and then go higher if we're going to be bullish, right? So watching the market today, what I'm looking for is that tap into that level, and then we'll take price to whatever the cleanest generated liquidity level is above us, right? So most of the time it's going to be those session highs, right? Because those are the levels that our price is generating around, and it's very obvious a key level, right? What else do we have telling me that price should go ahead and take this level? Well, if we look, we have perfect, almost not equal, but relative equal highs right here, telling me this is generated liquidity. The market purposely put that high there to go ahead and run later in this super accurate move right here, right? So what do I need to see? For my entry model, I need to see inverse and SMT either externally or internally, and I need to see a type of new fair value gap open up and a change in the state, right? So I get all of that on this move right here, right? I get SMT right here within the area in which I expect to reject. That's important too. SMTs aren't just anywhere, right? They're not just here or like, you know, anywhere. Like right here, there's a little bit of an SMT. We'll see what that does. Why do I not care about SMT if it comes, even if it goes here, and if it's obviously there and it gets acted upon? Why do I not care about it? Because at this point, look to our left. Why should we reject right here? There's no reason for us to reject right here. There's no fair value gap here. There's no low that just got taken. There's really no anything besides a small internal low. And then maybe if you really look for it, you can find some type of 5-minute fair value gap on London. But it's like literally reaching. And like the 10-second, 10-minute rule, bro. If you can figure out what it is in 10 seconds, if it's so dumb obvious, that's the type of things that we want to take. We don't want to be stretching the logic and playing around, because then we get into those situations where we're looking at the chart and we're trading something that technically follows the rules, but we get stopped out. And we're like, why are we getting stopped out? It's because the market doesn't affirm it, bro. Use your brain. Don't just trade to trade and say, I'm following the strategy. What's happening? Use your brain and figure out what is happening. Like, I need to see something so dumb clear, or else I'm not going to touch it. So when I see this, it was pretty dumb clear to me, right? I see SMT, very nice push straight off of that level. I wanted to not see this down close candle because at that point it's shown a little bit of weakness, right? I want to see us most likely just continue higher, but we do end up getting the down close, and because of that, I'm a little bit more hesitant, right? But I still, technically, like we just said, technically, I do get everything I needed, right? Inverse right here, new fair value gap, inverse comes down, gets used as support. Beautiful, right? The way I would have traded this, looking back, and it wasn't even that bad, was most likely stop at this low, and then we trade to this high, I think for some kind of 1.74R. I mean, very efficient trade. Let me tell you guys why I didn't take it. Watching this in the moment, understanding all of this, being like, this is my model, this is my model, I'm not going to take it because why? Why? Because understand your correlated assets and your weaknesses and your conditions, right? At this point, ES looks like a dream, but NQ, pull it over to the exact same point. We still do technically all the same things. We still come right here. We make that SMT right here, very obvious, right? Very obvious SMT. We make this inverse, new fair value gap, all this good stuff, right? But the second we get above this level right here, we start acting upon this fair value gap, right? This inverse right here. We start holding bearish order flow, and we look how much lower we dip right here. When I see that, it's telling me I'm probably not going to be convicted in any type of long after I see that much of a bearish pullback, right? Technically, the model is still valid, technically, but I only want to be trading the most efficient things that aren't going to fake me out, that aren't going to do no bullshit. So I'm watching NQ. I don't like how this is moving up. It's too lethargic. It's not right enough for me. So I decide not to trade ES because I recognize, okay, this could be a bit of a fake out. I know there's more setups coming in the week. It's Tuesday. I'm just going to sit out and chill. Looking back, I most likely should have traded it, because not just because it won, right? But because this way that ES looks, because if ES looks good but NQ is a maybe, it's mostly going to allow me to take the trade. If one is a maybe but one is bad, I'm most likely not going to take the trade. You know what I'm saying? If they're both maybes, I'm probably not going to take the trade. But if one is good, I'm taking a trade on the good trade, on the good one that looks good, right? Because if we look, that ends up happening, and then we see an SMT right here, and then that's what pushes price lower. So then go ahead and make the second SMT right here, and then we see the run throughout the rest of the day to end up taking Asia higher, which is our daily objective right there. So overall, I mean, a pretty clean day of price action. I just like to look back and recognize, you know, what happened inside me psychologically and in my decision making and processing, all that made me decide I'm not going to take the trade, right? What actually happened. The final thing I want to talk about is the VIX, right? I've recently been using this, and a lot of people don't touch this, and I don't blame them. It's a little bit kind of like DTM in some ways, but the way that I like to use this is I like to look when the VIX is above that green line 20. That's when I want to be taking my trades, because most of the time, once we're above 20, that's when we get efficient movement, right? And if you zoom out, this is something that's literally always oscillating around that 20 mark. So you're going to go through periods of bad price action. Usually these are going to be your periods of bad price action, right? But of course, you're still going to get good setups, right? I'm not like I'm saying don't trade for these 25, what is this, bro? 70 days that the market's not above, and only trade for these 5 days. You know, that's not what I'm saying. I'm just telling you, this is something that adds to your conviction if you're already very convicted, and at least, on the very least, you're watching the VIX for your session trend higher, right? This is the volatility index, right? So if this is high, this is the volatility index for the S&P 500, right? So if this is higher, your index is most likely going to move more. You're most likely going to get more efficient price action. So at the very least, if you're not above 20, trade and you're trading while the VIX is moving down, you're most likely going to get caught in some type of chop, right? But if you're able to trade while we're at least moving up, right? Until 10:04, we're moving up, right? Then we start to dip, right? That's when we get some stupid moves, right? From 12.49 to 13, right? Let's go and look on ES. What does that do? 12.49 to 13. Yeah, right in that point, that's when we see this big move, right? And obviously, it's not like it's going to give you a heads up or anything, but just recognizing it and being able to trade kind of in tandem with it. I literally probably checked it one time in the morning, so nothing crazy, but I just like to throw that out there, give you guys a little bit of sauce. So without further ado, I'm gonna let you boys go. Hope you guys learned something about the way that I analyze the markets, about why I decided to not take the trade, even though it technically followed all my rules, right? being more conservative, because the market always rewards those people who are patient and literally know exactly what they want and only take that, right? That's the dream trader that I aspire to be. You guys should aspire to be the one who literally sits back and maybe takes 1 to 2 trades a week and just chills, only takes the A plus setup. And if they don't like it, they go get in their supercar and cruise off. You know what I'm saying? That's what I'm talking about. That's what we all need to strive to be. So hope I can teach you guys a little bit of that, kind of get you guys in the mind flowing, maybe help you evolve as a trader. So without further ado, I'll let you boys go. And yeah, peace out.